Good afternoon, ladies and gentlemen. This quarter has been reasonably good. I would say really good in terms of ADT because in the first quarter we had only clocked about 23,129 crores ADT, but in this quarter we had about 38,000 crores ADT. As a result, the first half has almost all there as against what we achieved in the last year. The first half we had about 30,875 CR ADT as against 31,055 in the corresponding last year, that is April to September. So that is really a good sign. Of course, it's falling short by maybe 200 crores or less than 200 crores, but it's a reasonably good catch up we have done as against the last year. Now, having said this, even the month of August has really done well, and of course in the month of August we had about 43,262 crores ADT, and what primarily has driven this market is the bullion and more so of silver, and that has done really well. And crude oil, we are still expecting some kind of what you call communication from SEBI for lowering the margins. It has not happened as yet. So that is, once that happens, probably we can see some kind of adding up of numbers from crude oils. Otherwise, rest of the products are more or less doing at the same level as we had in the last year. And of course, in the case of base metals, there was an impact because the physical deliveries, especially in the first quarter, deliveries were not so effective because of the restrictions on the warehouse operations, etc. But in the month of August, September, there's a huge improvement. For example, in base metals, about 7,271 tons of ADT clocked in August, about 6,678 tons in the month of September. So that's a very good number, and we are doing that progressively, and we are improving those numbers. Going forward, I'm sure we will be able to, rather I am hopeful of maintaining this kind of trend as we move forward also. Although the volatility in the metal contracts, precious metal contracts has come down, but definitely still there's a lot of risk in it, and it's still driving the market. This being said, now that traded unique client codes so far, there also we are seeing a very good trend. In the first half H1, we have already clocked about 310,689 UCCs, as against last year 268,000. So that's a very very good growth, I would say, as against what we thought that pandemic will really hamper. Probably had there been no pandemic, we would have done still better. That's the way I look at it. I'm sure going forward also we'll be able to do a better a better UCC numbers will be clocked. These are the few numbers that I thought I should give, and now maybe I will leave it to my CFO to speak on some of the other products. But as we go on answering the questions, I will be speaking about other developments that are taking place in this space. For example, we launched about index in bullion index and metal dex, which called Bulldex is called bullion index, and metal dex is metal indices futures contract, and both of them are at this point in time in a very nascent stage, but they are really clocking reasonable and good, satisfactory levels of turnover and participation. And in fact, in Bulldex, about on an average daily 125, 130 members are participating in it, and in metal dex about 80 to 100 participants are there in terms of member brokers. UCCs are gradually increasing it. That's a very good development. At this point in time, we are not charging, and obviously we will not be able to do it. Maybe till 31st of March, we will not be charging. It's not going to be forever like this. I'm sure we will be charging it. Then only we will be taking into consideration into our financials. But till then, yes, we need to support those contracts. This is the. I think now I will ask my CFO, our CFO, Mr. Bola.
Thank you, Mr. Reddy. Good evening. Our top line for this quarter, as compared to the last quarter, there's an increase of 12%. As Mr. Reddy said, this quarter has been very kind to us. With this turnover, we have been able to clock for the first time since introduction of CTT, a transaction income of more than 100 crores in this quarter. So that is for us a significant milestone. We hope that we'll be able to maintain a reasonable trend going forward. Expenses have increased as compared to the last quarter, mainly on two counts. We have made a provision for variable pay in this quarter, which was not there in the first quarter. So there's a provision for variable pay for Q1 as well as Q2, and we have also incurred certain additional expenses in connection with the launch of our Bull Decks. So there were certain marketing expenses that were incurred, and we have made additional provision for tax. So net, as compared to June, on a consolidated basis, we are almost marginally ahead. On a standalone basis, they have dropped, but from the warehousing income, there's been a substantial increase in warehousing income from the clearing corporation side. Otherwise, and the clearing corporation side, as we mentioned in the last meet, from June onwards, they have been consolidating the accounts on line-to-line basis, and accordingly, the treasury income that they earn on margin funds is also included in the revenue from operations. The tax has been a bit, on a standalone basis, a bit high this time, but going forward, we'd like to keep it at around between 23 to 25%. So this time it has been a bit high because of some short provision made in the earlier quarter. So we made a provision in this quarter. But expenses have been under control, excepting for the variable pay as well as for the advertisement marketing expenses that have been incurred. And last time we had a substantial gain in our treasury income, which was a one-off case, as we discussed last time. It was a one-off case, which when we were discussing in the call, we agreed that it would be very unlikely that we were able to continue with this incremental gain that we got in June 20. So this quarter we are not, because the interest rates being what they were in this quarter, they were very tight, and there's hardly any notional gains that we made on our investments in tax-free bonds. Even in the mutual funds, we did not make much notional gains. Therefore, we ended up flat at around 17 crores on our treasury income, as compared to around 50 crores that we made in our Q1. So that's why there's a drop in other income. Otherwise, as I mentioned, thanks to the ADT for Q2, operational income has grown substantially. I leave it now to Mr. Reddy.
I think now we will keep it open for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone phone now. If you wish to remove yourself from the question queue once your questions have been answered, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star one. We have a first question from the line of Sujit Jain from ASK Investments. Please go ahead.
Yeah. Hi, Mr. Reddy, Mr. Bola and team, and compliments for a good set of numbers. Sir, in terms of the structural drivers that we've spoken about, which we are trying to develop, bank brokerages, etc., what is the progress? One can see bank brokerages such as ICICI Securities put out commodity products on their portal. What is the portion of standalone brokerages currently in the total volume? What is the contribution that is coming from PMSs, mutual funds, and including the bank brokerages if they've started? And few quick queries on what are the delivery volumes, what is the current margin in crude, what is the progress in option volume, and as well as you spoke about warehousing income and marketing spend, if you can quantify. Thanks.
Okay. On the mutual funds, 2 of them have already started. It's about 80 crores is their open interest that they have in this. Okay. And I will not be able to disclose exactly as on who is holding what, etc. But it's about 80 crores is the open interest that they have, and 2 of them have started, as I said. And still to take place, because there are about 7-8 of them are there who have an exposure to commodities, especially the precious metals. And for them to change the existing schemes, they have to go back to their investors or unit holders. So it's not happening. Probably when they launch the multi-asset funds or new fund offerings, then probably they will be able to provide for this. This is one. And the brokerages, especially the institutional brokerages, as you rightly pointed out, ICICI has already started. They are ramping up, and it will take some time. Time means, of course, they have their own targets to fulfill, no doubt about it. And because of the, some of the changes that we have implemented, that is in terms of zero negative pricing related, also the software developments that we have, deployed. And some of the changes are being deployed by the broker front end. And they have to do that at their back offices also. Some of them are not done, but then as a trading system, we have done it. So some of those developments are taking place in some of these institutional brokerage houses also. So that is the reason why some of them have not been able to launch. And so that's a priority number 1 for me, activating institutional participants. And AIFs, yes, there are already a good number of AIFs are already there on the exchange platform. I'm not disclosing all that numbers as such. As I say, they are not going to create volume. Okay, they are going to have open interest and stay there because they have an exposure. That's all. They are not traders in that sense. So they are participating. PMS have not come as yet. Okay. The most important, maybe 1 or 2 are there, but then I am not saying good number that have come. That is the reason I am not taking them into consideration as if they have come. And one major important issue is that the GST, because if they take any commodity delivery and then cash and carry, if they do it, the GST is an issue. And we have already represented to the government to make the GST, especially the IGST, we wanted them to issue it, make it applicable, so that the players being wherever they are, the IGST is good enough. But then under the GST rules, because the warehouses are located at the Thane or wherever it is, probably both the seller and buyer is treated as if they are the local in that particular state where the warehouse is. So they have to issue that GST, and they may not have GST registration in that particular state. So these are the issues which have already taken up the government to simplify this, and we are hopeful that they will address these issues. But again, on the crude margin, as I said, that I think it's about 130% there as of now, and it will, I'm sure, 130% crude oil, and we have applied to, as I said, SEBI. And this is likely to, we are likely to hear their decision maybe early next month. That's the way we are looking at it. On the issue of warehousing income, that goes into the what to call the clearing corporation. It's almost about 4 crores. That's the way it is. Almost 3.25 crores. Okay, 3.25 crores. And new charges are also been now recently levied, some administrative charges. Probably that is not seen as yet because just recently it was imposed. once that also started collecting, maybe you will see some more revenue coming. But it's not very big number. But then yes, little by little makes a great difference for us. On the warehousing deliveries you are asking, you have the deliveries numbers?
I have the percentage of overall volume.
Well, I have it. 1 minute. I have an absolute number. Okay. Well, it will be 1 or 2%. It should not be very big. That much I can tell you that. In the volume, in the sense, open interest you are talking about. Is that correct? Open interest. Because not a traded this one. But in terms of metric tons, I can tell you, and this is.
That's okay, sir. You've given us a fair idea as to what percentage that is of the total.
And as an exchange, we are supposed to be a loss. Delivery is a loss resort for those hedgers. And just to ensure that prices are in sync with the spot market prices, especially when the contract is expiring, that is the way that cut of delivery will make these prices converge. That's the way it is. What are the other any other questions?
Marketing spent on Bulldex.
Yeah, marketing is about 96 lakhs has been spent on this one, because about 15 days or 15 days before and then after, and so is Metal Dex. We are incurring expenditure. So much is there. That's right. It's 96 lakhs.
And one quick question is on who are the top players on the exchange? We presume they are standalone brokerages.
When you say standalone, I do not know what you are exactly meaning.
National brokerages such as Motilal, Edelweiss, IIFL, Angel, etc.
Yeah, that's right. In that sense, they are also listed companies, and some of them are such are the members. Yes, you are right. But there are also algo players are there. Again, maybe standalone, but then very big international algo players are also there. So, and a huge retail broker is also there. They also come in the top 5 brokers. That's the way it is. It's very good. Yes.
And one quick clarification: you said the negative pricing is still not incorporated, and hence the products are not getting
we have done that. Some of the brokers have not done it. I'm saying we have done that.
Sure, sir. Thanks. I'll get back in the queue. Thanks.
Yeah.
Thank you. We have next question from the line of Yash Narurkar from PPFS Mutual Fund. Please go ahead.
Hello. Yeah, am I audible?
Yes.
Yeah, I just wanted to understand the progress done in terms of the gold contracts. You just mentioned something about the bullion and silver doing well, so I just wanted to understand the gold, the mini and the petal contracts which you have.
Well, see, all the futures contracts are doing very well. There's absolutely no problem on that. It's only the gold mini options which we have introduced. Of course, LES is also introduced recently, and BSE, NSE also have launched a LES in the same contract, identical contract. So that's where we are looking at not great traction in that. But otherwise, our bullion contract is doing well. For example, in the first half current year, the bullion has clocked about 19,000 ADT, of which 8,900, that's almost 9,000 is by the gold and 10,000 is by silver. So they're doing well in the first half.
All right, got it. And secondly, I just wanted to check with the progress which you have on M Junction, because in the previous call which you had, you mentioned that, MCX will be signing a sort of a MOU of 50-50 JV between Steel Authority of India and Tata Steel. So how is that progress coming along?
Oh, no, it's like this. M Junction is promoted by Tata Steel and SAIL. Okay. Now, with M Junction, we said we will sign an MOU. We have already signed. Now that we are preparing jointly as per the MOU feasibility study report on that, and complete, end-to-end, including the financial viability, etc., etc. All that is target date is sometime in January. Okay, once this is done, I will take it to our board and thereafter next steps we will take it.
Okay, got it. And a last question. In the previous call, again, you had mentioned about, how MCX wants to be a recognized brand as similar to LME. And, a lot of initiatives were taken. So, what is the progress of that? And is there anything else that, we have sort of done for that?
Yes. See, we have already put up on our website for refiners, both the gold refiners as well as the lead refiners to apply. We have received applications, and technical audits have been completed in the case of gold, and in the case of lead, technical audits are under progress. In the case of lead, once again, after the technical audit is completed, a tester's audit, not tester reports are required. That means almost about 30-35 tons of lead is to be sent to some consumer who will use this metal, and then certify for his consumption this material is is meeting his requirements, their requirements. That's the way it is. So that is called testers, and most of the testers will be inverter manufacturers, battery manufacturers, etc., big ones. Then after this is received, we will be empaneling them. So this process for gold, it was to complete by the end of November. That's what our target date we have kept it. And for lead, it will be December. So it's progressing as per the timelines, and we will be announcing it by that timeline.
All right, got it. Thank you. That's it from my side.
Thank you. A reminder to participants to ask a question. Please press star followed by 1 on your touchtone phone now. We have next question from the line of Mohit Balakrishnan from Vriddhi Capital. Please go ahead.
Hello.
Yeah.
Hello. Am I audible? Yeah. Thank you for the opportunity, sir. So, I have a few questions. So, one, we've launched these index futures, bullion, and metal. So, we can see the volume, the ADT that is there on the website, but just wanted to sense, on Bulldex especially, because that's been launched for more than a month now. So how have you seen in terms of what has been the reception? Is it along the expectation that you had? And when do you think that you can start charging, at what threshold levels you have in mind for both Bulldex and Metaldex, if you can just broadly share that. So that was the first question. Should I list all the questions or?
Go ahead, ask.
Okay. The second question was, sir, in the earlier con calls, you've also mentioned about probably having a spot exchange for bullion. So I just wanted to understand that as well. I was reading somewhere that some World Gold Council is probably planning to set up a spot exchange in India. So I just wanted to understand where are we on that, and if there are any competitors doing that. The third question was, sir, on this technology platform. So we have this contract with 63 Moons. I just wanted to know when will this end, and once that ends, what is the next step? Do we have any plans to insource the technology and maybe do it on our own? And the last question was, sir, on the numbers. One there's been a significant decrease in the other current financial liabilities of about 200 odd crores, which has led to a decrease in the cash flow from operations. It's become negative this quarter, which is unusual for our business. So just wanted to understand what has happened on that.
Okay.
These were my questions.
Other three questions right now I will answer. One is, the government has decided to float a spot exchange in the GIFT City, and so we have waited for regulations to come. I believe yesterday or day before yesterday, the GIFT City authorities, IFSCA, has finalized or approved the regulations. We have not yet heard on those regulations. We have not seen because they have not uploaded as yet on the website. So definitely we will be there in that play in the GIFT City, no doubt about it. That's what our desire. We want to be. And so let me see the regulations, and then accordingly we will do that. As of now, we are not too sure whether one person will be, only one entity will be allowed or multiple entities are allowed. But whichever way it is, then we would like to have a role in it. That's what our desire. And we do not know how they will shortlist always if there is only one player. But it is too early for me to say on that, but we have an aspiration to be there. Now, World Gold Council, whether they will participate, they will be definitely, if they are there, they will be there in GIFT City, not in the domestic area, within this, not in. Rather, they will play only in GIFT City, not otherwise. Obviously, it's not permitted in the inland market. So, if they are there, it's fine. We are already in discussion, not for any spot exchange or anything. We are in discussion in terms of what is their thought process on it. How do we, if we have to set up exchange, what kind of planning needs to be done. All that stuff it's happening for the last many months, I would say. So it's not new. They are also discussing with everybody else also. So it's not for any setting up of themselves setting up any exchange. That's the way it is. Then comes to the Bulldex volumes. Now Bulldex and Metaldex volumes. Charging, as I said, till 31st March we will not be charging. Only yesterday the board meeting they have approved it. Initially they approved for 3 months. Then we are seeing that it's in a nascent stage. It requires support because currently the cross margin benefit is not given by SEBI, and they said that you apply after 6 months. So once the cross margin benefit comes, almost all 75% of the cost of margin will be reduced. If they have an exposure in the underlying products also, then it will be a big play. So as of now, it's not there. Like they are a standalone product, they are trading. The participants are dealing with it. So we are very keen to have the cross margin benefit. Then obviously it will fly. Till then, we want to reduce the cost of trading. That's why we thought we should not charge the transaction fees. So is the case with Metaldex. Of course, Metaldex has been launched just recently on 19th October. Then comes to the technology platform. On the technology platform, we have already floated an RFP. The existing contract will end in September 22, and the RFP is there on the website, and good response we are getting it. Let us see the RFP, if it is, in terms of process, it has to be completed by end of January. And we have to sign the contract. That's the way the timelines we have set out. So let's wait and see what will happen.
Thank you. With regard to the cash flow, there's a cash outflow. This is basically, in our clearing corporation, we receive a lot of cash margins from our members. So during the quarter, when you do a comparison from March to September, so we have members have taken back cash margins. So the cash margins have reduced in the clearing corporation. We are presently at around 480 crores as compared to an earlier figure of March of around 700 crores in cash. Yeah, thank you.
I hope that answers your question.
Yeah. So just one follow-up I had on this technology platform. So that means we are not going to have an in-house technology. Is that understanding fair?
No, that's not the way. If you look at the RFP, the way that we have said is we are looking for a source code kind of thing. So instead of developing a brand new application, probably it is better to take something which is already tested elsewhere. Okay, and if that comes with us to the source code or a perpetual license something, then we will go on building on that. That's the way it is. So we don't have a vendor dependence going forward. Okay, but at the same time we want a resilient platform. That's the way it is.
Sure. Thank you. I'll come back in this. Thank you very much, sir.
Thank you, sir. Participants who wishes to ask a question may press star and one on your touchtone phone now. We have next question from the line of Deepak Agarwal from Axis Mutual Fund. Please go ahead.
Yes, I wanted to understand on the broker concentration. So is our understanding right? So like Angel Broking got listed recently, and in their PPT they say they are almost 28.4% of the commodity volumes in India. So first of all, is our understanding right that they are so big as a percentage of our overall volumes?
Well, I will not be able to disclose any individual this one. For me, the top 5 as of the corresponding period of last year, it was only 40% top 5, and for first half, that is from April to September, 47.59. So the concentration is increased. Okay, and that's the way it is at this point in time.
And so are there any restrictions? Because I don't know whether that at a particular level they need to be capped as a percentage of the total turnover of the exchange, because frankly I'm coming from a concentration risk perspective. Are there any caps by SEBI?
No, there are no concentration at that stage. There is a concentration client level what you call limits are there, broker level limits are there for each product. Okay, It's not that overall. No.
Okay. So technically it can still, as this 47.59% of the top 5 guys can still keep on going up, right? Because at least there should be something at. So what are the limits? So like at the client level, it can be what certain percentage of the open interest of that particular commodity, right?
Yeah, it's not even the open interest. Every year there is some calculations takes place as to what is the total production, what is the domestic the imports. So together they look at is the total this one. All that the limits are decided. So much only can have an open interest. That is further broken into the client level. This one. External limits.
Okay. Thank you so much. Thank you.
Thank you. We have next question from the line of Aksh Vora from Raj Financial. Please go ahead.
Yes, sir. Just wanted to know how's the options segment doing in last couple of years since we launched. We were pinning down some hopes on the big volumes on that front. Is that playing out well, or it's still in an nascent stage and we still think that big volume is still far away?
Yeah, 1 minute. I'll tell you. Well, the ADT I have in the first half is about 900 crores, and the corresponding period is about 1300 crores, and this includes of course COVID period also. That's the way it is. No, I'm sorry. Corresponding was 906 crores last year, and the second quarter, in fact, it has done really well, about 1300, 1100 crores, 1300 crores like that. That is the reason why the Q2 was 1147 crores. Although the first half of the first quarter was 651 crores, second was 1147 crores, so the average happened to be 908 crores. And the clients are increasing. The clients' participation almost on 24,000 they have participated. So as against the last year is about 17,000. So that's a good number of growth in the UCCs. That's the way it is.
Right. But overall, sir, if we see in last couple of years, we have done something very remarkably in all the categories, like say bringing out some very good products, and from SEBI side also the participatory has been increased. So we're still not able to see that volume traction going up the curve as it should go aggressively probably. I am not getting what's stopping or what's impacting the volumes, or should it be a gradual growth we see, or we'll be able to see, or it will be some spark that should be visible in a couple of years?
See, if you see currently, again, I'm drawing an equity markets. It is the index options which are, maybe occupying a large chunk of the trading that is taking place in those exchanges. Okay,
right.
So we just launched the index futures contract. Okay, and maybe it will take some more time for us to launch index options. Then probably you can expect a substantial growth. But when it comes to these specific individual product growth, it is all depending on the relative volatility in the underlying products and the cost of trading in that, etc. So yes, it also keeps me on my toes, especially the growth in these performance of these option contracts. We're trying our best to see that it grows. That's why we introduced LES in 100-gram gold, because the 1 kilo bar means in terms of duration, it is a bi-monthly contract, tenure is longer, and it is 10 times more than this. So we thought it is a smaller one will fly, but then other competition has also imitated the identical contract. So that is option on goods. The underlying remains the same gold. So we have an LES, but then let us see. It's not still doing as well as we expected it.
All right. Thanks for your answers, sir. And so just last one, you didn't touch upon, do we see once that probably the index options products, or we were expecting such kind of volume spike in options when we launched it. So do we finally see those kind of big volume jump or aggressive volume growth coming in next couple of years, or the growth part would be similar to what we have seen in last 6-7 years of probably of somewhat of gradual growth?
It is too early for me to say about option on the index futures, because that is not even permitted at this point in time by SEBI, and we have just launched index futures contract, and let us take it forward and then grow, then we can definitely look at the other aspect of it. No, but at this point in time, it's not permitted either.
All right. Thanks for your views, and thanks for your answers, sir.
Thank you.
Thank you, sir. We have next question from the line of Pranav Mehta from ValueQuest Investment Advisors. Please go ahead.
Yes, sir. Just a follow-up question on this RFP for the new trading software. So as you said, you are looking for an open source code kind of a thing where you can build on it, and the aim is to reduce vendor dependence. So this is what I got from your comments. So does that mean that we have decided that we are not going to renew the existing contract with 63 months in terms of the existing software, or can they also be part of this RFP process? That's the first thing. And secondly, does this also mean that eventually, whoever we decide to go ahead with, so eventually we will end up owning the IP for this software, and we won't have these kind of licensing arrangements that we have currently?
I think it is too early for me to say what it is, how it is going to be negotiated. Okay, and I may be asking for X, but then everybody may not willing to share with X, but then they may give Y. That's the way it is. And so 63 moons are also eligible to apply, and I'm sure they too would participate. That's the way it is. So once all the bids are evaluated, then accordingly there is a criteria, technical competence, and the financial bids. There's some weightage has been given, and it is all disclosed in the RFP document, and the detailed RFP document is given. The open source is what you are talking about is essential to mitigate the cost of licensing of like your Microsoft licenses or Oracle licenses. This kind of things will not be will not be required to go for the maintenance of that kind of product. That is the reason open source is being asked for. But yes, we do not know how many will give license, how many will give source code, how many will not give, how many agree for perpetual license, how many agree for a tenure-based license. I don't know. It's too early for us to say anything. We have asked for it. That's the way the requirement have been specified. But let's see as we go along.
Okay, sir. Thank you. That's it from.
Thank you, sir. We have next question from the line of Harish Kapoor from IIFL AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. So just a couple of things, for the quarter as such, I didn't follow a couple of things. One is, your other income being lower, why is that and what should be the trend? Second, tax rate has been higher. You have kind of, I think, taken some more back, you've kind of recognized that part. So how should we kind of look at that? Third, you kind of spoke about some part of employee cost, some part of the other expenses, and even tax, which, you couldn't recognize in Q1, recognized in Q2. If you could just quantify it and just talk through what have you done, what is the thought process there? And fourth, on the crude side, I think we've been hearing about you trying to get the approval so that from SEBI, etc., so that you could reduce the margin requirement and all of those things. But it's kind of long now. So you've been trying to do it, previously too. So could you just comment why is there a delay and why has this not really started right now?
I will answer the last two questions. Okay, the other two Mr. Bolar will ask them. On the crude oil thing, look, there is almost all maybe 100 or 200 scenario analysis go on. Okay, in the stress test results, the scenarios are there, different scenarios, and SEBI has been asking us different scenario analysis we will create and then give them. This is the way it looks like, and this is the kind of margin that is needed to mitigate the risk in the system. So this back and forth is happening. And meanwhile, we have also sought some details from CME, Chicago Mercantile Exchange, and they took time to give some information with regard to negative pricing handling, etc., in their risk management system. So so all these kind of discussions are happening. And also other exchanges, how they dealt, maybe in Dubai or in Moscow, in Singapore exchange, etc. So this kind of discussions have taken time, and obviously the SEBI will take a considered view after taking all these inputs. I think it has come to a final stage of dispensation. I'm sure we will have, as I said, early November, early means in the next, in the month of November, we will have their judgment in this regard. So once that is there in place, I'm sure we will be able to get that contract going also. As regards
Sorry, sir, just one follow-up on this before we just finish this part. Yeah. So this November, you seem to be more confident now on the timeline. So is it that more or less the back and forth that was happening in terms of their requirement that has been submitted and it's just about the last leg of communication that is pending, or there are some more back and forth that still have to be done?
No, that's almost all done, like kind of thing. Okay, so that communication is done. Now the final decision has to be taken. Okay. Now on the employee provisioning. If you look at this, when we have, because of COVID, sometime in the month of May, we had a board meeting, and in fact, COVID impact also we have announced. So looking at that, we thought we shouldn't provide for the variable pay for the employees, performance linked bonus or whatever you call it, and provisioning only, not that it is paid or anything. We will decide payment obviously after achieving the targets, whatever the board has set that. So that's a separate part of it. But so in the first quarter it was not provided, and together it is provided in the second quarter, which happens to be about 4 crores and odd. Now, so the last year also around the same volume of, has been spent about 8 crores and 8.5 crores has been spent. So this year also it has been provided on a similar line, expecting that kind of thing. Yes.
So 8.5 crores for the first half has been provided in Q2. Is that right?
No. 8.5 crores is provided for the total entire last year. Okay. And the 4 crores and odd has been provided in the
this quarter. Yeah. And the second
4 crores provided for H1. Okay.
Yeah. So in H1, they provided 4 crores and the entire burden came in Q2. Yeah.
Sure.
I hope we have clarified that. The second query that you had was with regard to other income. As we mentioned in the last con call, June was we have invested in tax-free bonds, around 263 crores. Okay, so because of the the interest rates that took place in June, the firming of interest rates, we earned substantial gains, notional gains on a tax-free investments as well as in our mutual fund investments. Unfortunately, in September, and as we discussed in the last con call, there's no way we would be able to earn such gains going forward again and again in every quarter, isn't it? That would be very unlikely. So actually think that what we have booked in this quarter is actually what we have received in either when we redeemed our investments in mutual funds, or the interest income on our tax-free bonds, or on our interest income in PSU bonds. So basically we have received all this. We have actually booked the income. So going forward, I would expect, unless we see RBI cutting rates further, which looks unlikely at this point of time when we read the RBI minutes with regard to the credit policy. So it looks unlikely that they would cut rates further at this point of time. So I would take the stand that we would expect these amounts to remain going forward at these rates that we have booked in the second quarter. And with regard to the tax, when we closed June, we had short booked around 2.8 crores as in tax for the first quarter. So we have booked that in this quarter. And in the previous quarter, if you have seen our detailed presentation that we've given to the exchanges, we had taken an excess provision of 1 crore that we had made in earlier years in the tax. So that impact obviously is not there this time. And going for this quarter also, we have booked, we've utilized MAT credit of 2.85 crores. So hopefully going forward, we'll keep utilizing the MAT credit. As of now, we have around 17 crores left of MAT. So once we utilize that fully, maybe I think at this rate it will take another 5-6 quarters. Once we close that, then we'll go to the present taxation rate. Yeah. I hope I've answered.
Last thing, if I can just ask, sir, just in terms of the broker case regarding the crude aspect which is there. Now, could you just provide an update where you are on that and what has been the development? We know that a couple of brokers had filed it, so it's kind of been a while. But if you could just update where we are on that right now, has the hearing begun? Have some development there?
Sure. Now, the case has gone to Supreme Court. We filed in Supreme Court for consolidation of all cases because in various high courts it's scattered. Then Supreme Court has given an order, interim order, all hearings should be stayed. And the second thing is they have also said that every applicant should be given a notice. So the notice has been served. The court will hear about consolidating all cases for hearing in Mumbai. That's what our ask was. So did SEBI. SEBI also has asked for the same prayer. So that's the way it is. At this point in time, hearing is awaited in Supreme Court, and thereafter the consolidation part will be decided. As such, the case will be heard by one of the high courts. That's the way it is.
Okay, sure. Thanks, sir. Thanks for answering my question. That's about from my end.
Thank you, sir. We have next question from the line of Ankit Gupta from Alchemy Capital. Please go ahead.
Hi, sir. So you said that the trading margin membership withdrawn around 200 crores. So my question was...
Your voice is not clear.
Okay, just a second. Yeah, hello? Sir,
yeah.
you have said that margins, members have withdrawn some 200 crores of margins. So isn't it a minimum requirement to trade on the exchange, or how can we interpret it?
No. What Mr. Bola was saying is, some brokers had given a cash margin. Okay, they have withdrawn the cash margin. They may have given bank guarantees or fixed deposits, some other collateral they may have given it. That's what the point he was making. So it is not for any single broker so much is the requirement. No, it's not the case.
Got it. So the cash margin which is reduced. Okay. Thank you.
Thank you. We have next question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yes. Good evening, sir. Sir, just two questions. The first is on the electricity derivatives. Is there any progress, sir, which you can share? And secondly, do we have any plans to enter into gas exchanges? No.
Okay. On the electricity derivatives, we are very active. We will be in the forefront. That's the way I can say. And probably maybe in a day or two you will hear some news about it also. Okay.
On the gas exchanges, sir, are we interested, or we don't want to enter into the domain?
We are very much interested on the gas exchange, but how to go forward in doing it, we are yet to figure out as to the approach to that. We don't want to have it crowded also, and at this point in time we are seeing the volumes on IGX. Let us see how we will move in that direction. But we have it anyway. The gold spot exchange is something which we are keen to participate, and as somebody said, it's already there in the GIFT City, and 2 days before they have formed the regulations, we'll be working on that.
If I may ask, which are the growth, which are the likely products which can give you growth in the sense that the additional products which can give you growth in FY22 as?
Well, index features is something that we wanted it to grow substantially. This is one area which we are looking for it. And as I have been saying it, we are keen to pursue also some of the initiatives that we are pursuing it at this point in time, like the spot exchange projects are there. That is something that we are very keen to pursue them. These are the ones which we look forward to fuel our growth maybe in the midterm. That's the way it is. I am not giving just for the next 1 year, but definitely next 2-3 years time, definitely it will. Spot exchange is also going to fuel the growth.
Okay, sir. Lastly, the crude oil volumes, sir, when do you expect it to get back to the normal levels? And how is it trading right now? What is happening in October?
Well, it's about 3,000 crores is the average ADT, the crude oil. And the way that as I said, that about almost 130% margin is there. That's why it's not flying as it used to be. In fact, if you see the corresponding period last year, the first half, if you see that crude oil was 12,000 crores. Currently it is 3,000 crores in the first half. That is H1, April, September, 2,922. And the corresponding period last year is 12,233. So there's a huge growth potential for us. We are looking for this relaxation in margins. Once they are put in place, it will definitely fly.
Okay, understood, sir. Thank you, sir. Thank you, and best of luck, sir. Thank you.
Thank you.
Thank you. We have next question from the line of Mohit Balakrishnan from Riddhi Capital. Please go ahead.
Yeah, thank you again for the opportunity, sir. Most of the questions have been answered. So just on taking forward this question about the growth over the next 3-4 years, you talked about spot exchanges being a very critical part of it. So I have a two-part question here, sir. One is, so do you expect spot exchanges to start coming, trading to begin in the next financial year? You introducing products and sort of starting exchanges wherever needed. That was one. And in the spot exchange, gold is the paramount thing that you are working towards, right? If my understanding is correct.
Yes. For both the questions, the answer is yes.
Okay. Got it. The other questions are again just on this overall 3 to 4 year growth path. So, sir, index futures and how currently our ADTV is around 32,000 crores. This quarter was very good, obviously. How much do you think index futures can really add up? Because you gave example of equity, and in equity, both index futures and options have obviously really pulled the volumes for the exchanges there. But if in your assessment globally, has there been a precedent where similar kind of products in global exchanges, the success has been there for such products? If you can throw some light, that would be helpful. And what kind of volumes are you expecting? And in terms of, let's say if we have to hit a ADTV of 60,000-70,000 crores a day from where we are. I'm not talking immediately, sir. I'm talking, let's say, 3 years out. So 3-4 years out. So is that possible? How much would that be contributing from index futures? And broadly, sir, you can change the numbers. I'm just broadly asking.
I understand. Thank you for your question. Let me tell you, global indices, wherever they are traded, there's a difference here. Those are constructed by third parties like S&P, for example. They have constructed, taking one from ICE, another from two from some other exchange, three from some other exchange, etc. So it's not in the same exchange. Okay, that's the one. So there are different time zones and they are traded differently. And also, people don't get what we call cross margin benefits. The margin benefit as such also, okay, because they are in different exchanges. That's the way it is. So, whereas here we have this indices constructed based on the prices of the commodity which are traded on the exchange only, nowhere else. So, this kind of cross margin benefits can be given, and it will definitely fly. That's what it is. Now, at this point in time, the cross-margin benefit is not available. For 6 months, it will not be there. That's what SEBI's view was. Thereafter, they asked us to backtest with the data and then come back. Then we will consider. That's the way it is. So my view is these have a great potential to grow. There's no doubt about it. Great potential to grow. I repeat that. Okay. Now, you want me to put a number as we go along? And more than the index futures, I am looking for index options. Yes, it will grow, but once the index options are also permitted, definitely that will take off. Okay, and so if you ask me with the global experience, again I am telling you, because of this kind of structure of the indices, it did not fly, and so ours is going to be a unique experience to that extent. And I'm sure we will be able to